All right. So everyone's been buzzing about the market, right? All these predictions flying around.
Yeah,
And most of them are, pretty optimistic for the year.
right.
But we found this fascinating analysis from Harvey Weingarten,
Okay.
the cosmic value investor, as he likes to call himself.
I've heard of him.
Yeah. And his take is a little different.
Oh,
He's predicting kind of a wild ride for the market this year, like a W shape, with not just one,
okay.
but three potentially downturns.
Wow, 3.
Yeah. So we're going to deep dive into why he's making this pretty bold call when it seems like everyone else is so bullish.
Yeah, that is definitely a contrarian view.
Right?
And that's what makes it so intriguing.
Exactly.
You've got all these big banks predicting a smooth, like 10% rise in the S&P 500.
Yeah.
But Weingarten, he's not buying it.
So let's get into these downturns.
Yeah.
What's the timeline he's looking at?
Well, he actually thinks the first 2 downturns are already behind us. Like just a quick dip back in December and then
Right.
another one that started right after Christmas.
Uh-huh.
But here's the thing. He thinks this second dip could extend all the way to, get this, January 19th.
And January 19th.
Uh-huh.
That's inauguration day.
Exactly.
So he's tying a market downturn to the inauguration of the new Trump administration.
It's an interesting connection.
It's definitely unexpected.
Yeah, and what's even more unexpected
Yeah.
is that he then predicts a rally
Ugh.
fueled by, all those expectations of the typical pro-market Trump policies.
Right.
But then he throws in another downturn predicted for June.
So a W shape with a rally, like right in the middle.
That's what he's seeing.
I mean, this is so different from what we're hearing from most analysts.
Yeah,
Like everyone else is so optimistic of the market.
it's a stark contrast.
What is driving Weingarten's bearish outlook?
Well, he points to a whole bunch of different factors, all kind of like weaving together to create this, in his view, very precarious market landscape. Okay.
One of his biggest concerns is what he calls overinflated asset prices,
Okay.
especially among, those big tech giants that everyone's been piling into.
You mean what he calls the Magnificent Seven?
Exactly.
Apple, Amazon, like all those heavy hitters.
Right. He's questioning whether those companies are really justifying those sky-high valuations or if we're looking at, a potential bubble about to burst.
Yeah.
And it's not just tech. He's worried about inflated prices across all these major asset classes, stocks, bonds, commodities, the whole thing.
Okay, so that's one piece of the puzzle.
Right.
What else is he worried about?
Well, he's got this whole laundry list of concerns.
Oh, boy.
He talks about the growing mountain of global debt
Yeah.
and the possibility of like an economic slowdown on the horizon.
Okay.
And he uses this term sticky inflation.
What does that mean?
It basically means that inflation is not going away anytime soon.
Oh, got it.
And then you've got, a tightening credit market, which makes it harder to borrow money.
And a softening labor market,
Right.
which could mean fewer jobs and more competition.
Okay.
And let's not forget the whole trade tensions thing.
Right.
All
Yeah.
those tariffs and trade wars that keep popping up.
It's a lot.
It is.
I mean, it's one thing for like Wall Street analysts to just throw out these predictions, but it's another thing to really understand what it means for, everyday people.
Absolutely.
Like, what does a tightening credit market actually mean for someone trying to, buy a house or start a business?
That's a great question.
Yeah.
So imagine you're trying to get a loan.
Yeah.
Well, that tighter credit market means it's going to be harder to get approved. And if you do get approved, those interest rates are going to be a lot higher.
Wow. So it actually makes a huge difference.
It does.
And what about a softening labor market?
Well, that means more people competing for fewer jobs,
Right.
which could lead to lower wages
Yeah.
and even less job security overall.
So basically, this isn't just some abstract economic theory. It could actually directly impact people's livelihoods.
It absolutely can.
And then you combine that with rising inflation that's eating away at everyone's purchasing power.
Right.
It's a lot to think about.
It paints a pretty sobering picture.
It does.
And Weingarten doesn't even stop there.
Oh, no.
He throws in even more things to worry about.
Like what?
High deficits.
Right.
All those global conflicts, in places like Ukraine and the Middle East.
Yeah.
And get this, he points out that asset managers have the lowest cash holdings in 13 years.
Really?
Yeah, and he sees that as a huge red flag.
Wow. So we've got this picture of a market that might be about to take a few tumbles.
Yeah.
But at the same time, all the mainstream analysts are saying things are looking great.
Yeah, it's a bit of a head scratcher.
Why should our listeners care about all this?
I think the biggest takeaway here is don't get lulled into this false sense of security.
Yeah.
Just because those mainstream predictions are looking rosy. Weingarten's analysis, even though it's a contrarian view, it forces us to at least consider the possibility that this year might be a lot more turbulent than everyone's saying.
Got it.
It's a call to, be informed,
Yeah.
to really question those assumptions.
Correction, everything.
And to start thinking about how you might navigate this potential volatility.
So what you're saying is, even if most experts are saying things are good, it's always worth getting a second opinion.
Exactly.
Especially one that challenges the status quo.
Right, because sometimes, like Weingarten's analysis shows, the most valuable insights come from looking beyond the surface and considering those alternative perspectives.
I love that.
Yeah.
All right, so we've got this potentially volatile market on our hands, but what if you could just bypass all that risk and buy your way into a whole new opportunity? Well, turns out there might be a way, at least according to our next source. We're going to deep dive into Trump's controversial gold card proposal. A $5 million ticket to U.S. residency.
Oh.
Yeah, stick with us because this one's a doozy.
I'm intrigued.
All right, let's get into it. Okay, so imagine this. You've got $5 million just sitting around.
Wow, that's a lot of money.
Would you throw it into this market roller coaster that Weingarten's predicting?
Yeah.
Or would you try to buy your way into the U.S. with Trump's gold card visa program?
Interesting question.
That's what we're going to look at today.
Okay.
It's this proposal's been making some waves.
It's definitely caught my attention.
Yeah, I mean, this idea of just purchasing U.S. residency for $5 million, it's almost too good to be true.
It does sound a little crazy.
So how does this gold card even work?
Well, from what I understand, it's pretty straightforward. So you pay the $5 million fee.
Okay.
And then you get granted U.S. residency, which is basically like a green card.
Right.
And that puts you on track for potential citizenship later down the line.
So Trump's basically saying this is a win-win, right?
Yeah.
Wealthy foreigners get access to the U.S. And then the U.S. gets this huge influx of cash.
That's the idea. But of course, nothing's ever that simple.
Right.
Our source actually brings up some of the skepticism around this program.
Okay.
Some critics are worried it's just a rebranded version of that EB-5 visa program.
Oh, right.
Which has had a bunch of its own problems.
And what about Trump saying he doesn't even need congressional approval for this?
Yeah.
He says it's not technically giving people citizenship.
Right.
It's just residency with a possibility of citizenship later.
Interesting.
Plus, he's claiming it'll generate trillions in revenue.
Trillions.
Yeah, and he says that'll help pay down the national debt.
Those are some pretty bold claims.
Yeah. I mean, bypassing Congress entirely, that's...
Yeah, constitutionally, that raises some questions.
Definitely.
And then that revenue projection, I don't know.
Seems a little optimistic.
Yeah, I think we need to look beyond just these big statements and really consider what the impact of this gold card could be. Both the good and the bad.
Okay, so let's get into that. First, let's look at the economics of this.
Okay.
Trump's argument is that it'll bring in tons of money, create jobs, and boost the economy. Is it really that simple?
Well, an influx of capital can definitely have a positive impact.
Yeah.
But it really depends on where that money goes and how it's actually being used.
So, what if all these $5 million investments are just going into, luxury real estate?
Right, or speculative ventures.
Instead of things that could help more people, like local businesses?
Exactly, or infrastructure projects that actually create jobs.
Right. So it's not just about how much money comes in.
Yeah.
It's about where it goes and who it benefits.
Absolutely.
Okay, what about the jobs?
Well, with job creation, you have to think about the quality of those jobs.
Yeah.
Are they, good-paying long-term jobs?
Or the kind that actually help the economy in the long run?
Exactly. Or are they just these, temporary low-wage gigs?
Right, that don't really offer much stability.
Right. So we need to look beyond those initial numbers.
Okay, that makes sense.
And really consider the long-term impact.
And what about the national debt? Can this gold card really bring in trillions to help pay that down?
Even if 1 million people signed up for this thing, which is pretty unlikely, that would only bring in $5 trillion.
Which is a lot, but...
It is, but the national debt is in the tens of trillions.
So it's not going to be a quick fix?
No, not at all.
All right, so what about the social impact of this?
Oh, yeah. That's important.
Bringing in all these super wealthy people, that could really change things, right?
It could. We need to think about housing affordability,
Right.
access to resources,
Ugh.
and just like the overall feel of communities.
What if everyone just moves into the already expensive areas?
It's like it could make inequality even worse.
Drive up housing costs.
Yeah, and push out people who've lived there for a long time.
That wouldn't be good.
And then there's the potential for cultural clashes.
Right. I mean, diversity is great,
It is.
but it can also be tricky if it's not handled well.
Absolutely. Integrating people from all different backgrounds. It
Yeah.
always comes with challenges.
And then there's the ethical side of all this.
Right. Like, is it fair to basically sell U.S. residency to the highest bidder?
Yeah, did that go against the whole idea of merit-based immigration,
That's a big question.
where people are supposed to be judged on their skills and what they can contribute?
Right. Does wealth really trump everything else?
It makes you think.
It's a really complex issue.
It is. So we've got this gold card with its potential economic upsides,
Yeah.
but also these social and ethical concerns.
Right.
It's a lot to consider. But, before we wrap things up,
Yeah.
let's switch gears and talk about some ways to handle all this uncertainty.
Okay.
We're going to look at Weingarten's advice on how to protect your money, even in this potentially shaky market. Okay, so we've got this potentially crazy market on the one hand,
Yeah.
and this golden ticket to live in the U.S. on the other.
Right.
It's a lot.
It is.
But let's say you're not some multimillionaire trying to, buy your way into America.
Okay.
What can our listeners do to, handle all this uncertainty
Right.
and, protect their money?
Well, the good news is,
Yeah.
even in a crazy market like this, there are always opportunities out there.
Okay, that's good to hear.
And Weingarten, luckily, gives us some pretty specific advice for
Okay.
how to invest when things are, a bit shaky.
Okay, let's hear it. Where does he say to put your money when everything's looking so uncertain?
He's a big fan of what he calls safe investments,
Okay.
like particularly hard assets,
Hard assets, like what?
like gold and silver.
The classic, gold rush when the market gets scary.
Exactly.
But what makes those precious metals so safe?
Well, they've historically held their value pretty well, especially during times of, economic turmoil and high inflation.
So it's like an insurance policy for your portfolio.
Exactly. When stocks and bonds are tanking, gold and silver tend to stay steady
Oh, okay.
or even go up in value.
Interesting.
So they can kind of protect you against those losses.
So it's all about, not putting all your eggs in one basket.
Right. Diversification is key.
Especially when that basket's looking a little shaky.
Exactly.
But Weingarten doesn't just stop at precious metals, right?
No, he doesn't.
What else does he recommend?
He also likes high quality stocks.
Okay.
Ones that have a combination of strong dividends and something called pricing power.
Okay, pricing power. Break that down for me.
Sure. So pricing power basically means a company can raise prices without scaring away customers.
Okay.
It's a sign that they have a strong brand,
Yeah.
a loyal customer base,
Uh-huh.
and something that people really want, even if it costs a bit more.
So in a market where, inflation is eating away at everyone's buying power, these companies can still do well
Exactly. They can keep their profits up,
and even make more money.
and that makes their stock more attractive to investors.
So you're looking for companies that are not only doing great now,
Yeah.
but also have the ability to, adapt and thrive when things get tough.
Right. They can weather the storm because people need what they're selling.
That makes sense.
And then there are the dividends.
Right.
Those are those regular payments that companies give out to shareholders.
Yeah.
And those can provide a steady stream of income, even if the stock price is going up and down.
So it's like a safety net for your investment.
Exactly.
I like that. A little cushion for those market bumps.
Exactly.
But Weingarten also talks about this category called special situations.
Right.
What are those?
Well, special situations is kind of a broad term,
Okay.
but it usually refers to investments that are, special.
In what way?
They could involve companies that are going through mergers or acquisitions,
Right.
or restructuring or spin-offs.
Right.
Those unique events that could lead to big profits.
So instead of looking at those big famous companies that everyone knows,
yeah,
you're digging a little deeper, trying to find those hidden gems that no one else has noticed yet.
that's the idea.
Sounds like a treasure hunt,
It can be.
but it also sounds risky.
It does require more research.
Yeah.
And, a willingness to take on a little more risk.
But if you find the right special situation,
Yeah,
the payoff could be huge.
it could be.
All right, so we've covered a lot of ground today. I mean,
We have.
from a potentially wild market to a golden ticket to U.S. residency.
It's a lot to take in.
It is. So if you're feeling overwhelmed by all this, like, what's the main takeaway?
I think the most important thing is don't panic.
Okay.
Uncertainty is always going to be a part of the market.
Right.
It's how you deal with that uncertainty that matters.
So stay informed.
Yes.
Don't put all your eggs in one basket.
Diversify, diversify, diversify.
And think about both your short-term and long-term goals.
Exactly.
And that'll help you navigate all this craziness.
It will.
I love it. Beautifully put.
Thanks.
So if you're feeling bombarded by all those like predictions and all that market noise, just remember, knowledge is power.
Absolutely.
Take some time to understand what's going on.
Right.
Get different perspectives.
Yeah.
And make smart decisions for your own financial goals.
Couldn't have said it better myself.
And hey, if you ever find a source that has you totally confused, you know where to find us.
We're here to help.
We'll deep dive into it with you.
That's right.
And help you find those golden nuggets of wisdom.
We'll make sense of the chaos together.
Awesome. And remember, even in this world of market swings and, golden tickets to America, the most valuable thing you have is your own informed judgment.
Couldn't agree more.
So keep learning, keep asking questions, and keep looking for those opportunities.
And of the spirit.
Until next time, happy investing, everyone.